One of the things that I hate hearing from people is, I wish I knew that before. And so I'm going to tell you now before you file your 2024 tax return. So if you're self-employed, one of the things that you need to know if you're thinking about buying a home in the next year, maybe 2 years, is the way that lenders look at your income, the way that lenders calculate your income, especially if you're self-employed. And so they are going to average, in most cases, sometimes you can get away with 1 year if you've been in business a long time. But in most cases, if you're self-employed, they're going to average the last 2 years' income that show up on your tax return. Now, be very careful here, because if you go look at your Schedule C, if you file a Schedule C, which is oftentimes if you get 1099 income or you have a small business, that's where the income goes on your tax return, is on Schedule C. On the top of Schedule C, it's going to say how much money you brought in. So maybe you sold widgets and you sold $1 million worth of widgets. Doesn't mean you made $1 million. We're not going to look at it. Lenders are not going to look at it as though you made $1 million, because as you go through, you're going to start looking at your expenses. What did it cost to make those widgets? And what was the raw material? What was the labor cost? What was the shipping? All of these things that you're going to take as deductions. And then at the bottom line, it's going to give you a profit. That is what the lenders are going to use as the basis of your income. So if you sold $1 million worth of widgets, your profit was $100,000. They're going to show that you made, or calculate as though you made $100,000. Now, there's some things that you get to add back in if you have depreciation, if you have mileage. There's some things that that we can do to actually increase your income from just that profit amount. However, the main thing I want you to be aware of, the main thing I want you to know is it's not the amount of money that you made. It's the amount of profit that you kept. And so I talk to people, not all the time, but regularly, that sit here and tell me that, hey, I made this much money, where in reality they made a lot less money. Because the way I like to explain it to people is that the IRS, they're going to look at your income through a certain lens, and that lens is going to be dictated by the way the CPA, by the way your tax preparer puts those tax returns together, and lenders are going to look at it with the exact same glass lens. And so be mindful of it. Go into next year filing your tax returns with that in mind. And if you're looking at making a home purchase in the next little bit, maybe a good idea to go ahead and have a consultation with an experienced loan professional, so that you can make an informed decision when it comes time to fill out your taxes. Good luck and happy holidays.